Good morning and welcome to the 191st edition of Talking Ball. That's gone very quickly, isn't it, Stevie?
Yeah, feeling quite old now.
Take the weekends out, and that's got to be a year, probably, nearly.
Yeah, it can't be far off. I think we started in October actually, but it's not far away, is it? October.
Well, let me do a quick calculation. 191 divided by 5 times by 7. 267. So including weekends divided by 7. 38 weeks. So not quite there yet, but
no,
anyway.
but it's sort of this 2020 is just flashing by, isn't it? So it's a bit of a blur.
Bit of a blur.
Well, it's kicking off this morning.
Yeah, do you want to show what you're looking at?
Yeah. Just looking at, we've had one winner and one loser really, but managed to sort of like curtail the DAX loss this morning as we had this initial spike down. I'll show you it on I need a shorter term time frame to show you it. We had this initial spike down. 129.20 was the support level that I was really looking at from way back. I like to buy it just in front of the 13 level. Everyone knows I talk about that quite a bit. So 129.20 was the level. It spiked down and rallied higher. It had a nice 60 ticks bounce off that, which was that's equivalent to where our stop was. So we had a 1 hour bounce, which is quite nice. Thought that looks good. But then it's just I pulled the stop into 129, the figure, and it's just taken it out, and it's made its way down. It hasn't quite reached where the original stop was, 12,860. But the FTSE, I had a bit of a different opinion on it this morning, and I was selling a break of this 61.64 level, so I sold it at 61.60, just hit the target. And funny enough, it didn't have that bounce that the DAX did, so that's worked out quite nicely. We've already sort of like had a couple of trades open and closed.
I'd say we're normally waiting for triggers at 9 o'clock. We're not normally in and out, which is nice. It means we can get to the pub early.
Yeah, we can have breakfast now and sort of
relax, kick back a bit.
Yeah.
Was there any news posted then on the back of that?
Well, there was definitely some reaction because it was. I'll just look up what it was. So when did it start? It started at 7:45. We have nothing obvious out. Turkish, blah blah blah. No, nothing. I can't see anything really on the wires. French CPI, I wouldn't say that would cause it. So I'll have a little bit of a butcher's while we're chatting and see
just
where it's come from.
Looking on news feeds, I can't see anything. But
I like the IG news feed. They've got a little stream on the right hand side.
Yeah,
show you here. Just this, and you can have they incorporate tweets and they can include your notifications and stuff like that, and that's always really interesting to keep a tab on things, and that's pretty quick. You've got people like Forex Live on there and Zero Hedge, which is always really entertaining, and you've got the IG analysts as well. They're pumping stuff out. City AM, all that stuff. So normally the news headline will feed through, so I'll have a little wonder while you're sort of like giving us a view on the FX.
Yes, I shall waffle on for a little bit. Let's talk about dollar first. We like the dollar index. This is the daily chart. This just goes to show what sort of mixed intraday trading we've had this week and last week, really. I mean, if you put the old tool on there and move it to the side, you've got 12 days, 12 trading days, so over 2.5 weeks, where really the dollar index has gone nowhere, and you really need to break it down into shorter time frames. So we have been talking about this all week, which was this previous swing high, 261.8%. We got a sort of decent move to the downside. We mentioned this yesterday, support 93.09, dipped under there and has moved higher. Now, if I get rid of these and move them off for a second, and I'll put a fib retracement on because I'm expecting this I want to break to the upside eventually, but I don't know if it's going to happen yet. And I think we're going to get continued sort of volatility. So you've got a 61.8% fib here. And what we mentioned before is that a lot of the time, even though you've pulled back to a 61.8% fib, that looks like a pretty straight line. And normally these pullbacks are in free waves to make some sort of cipher pattern. So what has a tendency to happen is we sort of do this and wash out the move back down here takes out these longs that have been established. So the longs get established, they think they're on board, it turns around, comes down, takes out stops, and then gets reloaded here. And a lot of retail people get shafted in between these two sort of levels. So at the moment, I still think the favorable trade is to buy dips if we can get it. So again, sort of looking into the FX majors, it's pretty mixed bag really, and I think you've got to look at the crosses. I mean, dollar yen I quite like today, and I do like the fact that we've seen that move lower in stocks first thing. This is euro dollar, and again, selling into rallies. I'm actually trying to celebrate, but I don't think I'm going to get it. Cable buying into dips, dollar Swiss selling into rallies. This is a pretty good mirror of what's happening in the dollar index at the moment. So expecting that move up to then move again to the downside. But this is one that's caught my eye this morning, and we're coming off it quite nicely. We have some bespoke indicators that we built some time ago that highlights areas of support and resistance, and they're very good when they line up with other formations. And here on this chart, and we did have a signal to sell at 106.97 yesterday, so if anybody's held their overnight positions, they're on side quite nicely now. We're obviously trying to sell at 106.97 again today, so we're probably not going to get it, but I think this is quite a decent Gartley pattern, and the R on it is pretty decent, around about sort of 7R. And you've also got this area here has been quite pivotal. So 106.98 was our exact level, and we only sort of got a push up to, what was the high trade, 107.04, 107.05. So just 7 ticks offside now. It's starting to come lower. So that I quite like that. Might take that for the trade of the day, but I'm also looking at Euro Aussie. So I'm basically, what I'm trying to say to everybody, the hundreds of people that are watching this, is that I'd prefer to stay away from the dollar really today, because I think you'll get chopped about, and I think the favourable trades are the crosses, basically.
Nice one. I just muted there because the dogs are about to bark because the
postman.
There you go. Yeah, the postman is just trying to do his job.
Or anybody in an luminous jacket.
Yeah, it doesn't have to be. They can just smell him. I think they smell his fear. He's coming walking towards the door. I mean, you know how big Buddy is. He's tiny, but he's got a scary yap. Yeah, no, I sort of I get that. It's sort of the dollar is from basically not focusing on the dollar too much. Obviously, it affects a lot of things, but I'm sort of looking at it at the moment from a little bit of a further point away. I'm sort of feeling there's like not a lot going on in it. But the one candle that I'm looking at is this doji candle.
I'll move it back.
Last week. There's this doji candle on the weekly chart.
Yeah.
Why isn't it giving me the weekly chart? Give me the weekly chart. So here, this is sort of like we had this big sell off to like the 92.52 area. It bounced back, so that's quite positive-ish.
Yeah.
Sort of like a momentum stalling. And the doji candle last week, and we look like we're forming another doji candle this week. So I'm sort of with you on that. It feels like after this sort of really, I'm not going to call it parabolic, but it's quite aggressive move lower. Potential for a sort of like at least a pullback. So yeah, it's but every time I look at it every day, it's around this 93. It seems to be around this 93.20 level. So
Well, we did say
it
it's a
doesn't.
bit like Groundhog Day at the moment, didn't we?
Yeah,
I mean, if
it's
you look to some of the crosses and you go
yeah,
back 2 weeks, there's little net. You've had intraday volatility, but
yeah.
they really haven't gone anywhere.
No.
It's quite bizarre.
Yeah, I mean the other obviously the markets that are sort of like I'm looking at, obviously gold and silver. We've obviously had this really decent sell off in the gold and silver. Feels like the retail traders have got in and then they've been sort of like squeezed out. But we've had a nice reaction from the lows over the last couple of days. So the interesting charts for me today was this formation that we've seen in both gold and silver. Now it looks a little bit different on some charts. This is a bullish hammer, so that would be a morning star formation on other charts. On this chart, it's a morning doji star formation because that's a doji opening and closing at the same level, and the reaction higher is basically is a formation. It's a 3 candle formation.
Yeah.
Yeah, I think on a daily basis, for me, it looks pretty positive. I'd like to have seen this candle yesterday extend a little bit higher, but we seem to be capped around the 1950 to 1965 area. We've probed higher again today, got to 1962. It's pulled back, trading around 1946. But on an intraday basis, I'm looking to buy a little dip because I think there is a bit of a potential for both gold and silver to maybe. You can see it on this chart as well. This is a Morningstar formation, and that's a bullish hammer rather than a doji. So it looks a little bit better on silver. And we've obviously seen this momentum stall with this big sell-off we had, and we've gone slightly negative on the daily basis. However, this is quite flat at the moment, so maybe potential for a correction. Especially as we're seeing this sort of like aggressive move lower in equities this morning, early doors. I've looked at sort of like news channels and Forex Live saying just a little bit heavy, a little bit of a technical correction, maybe. Feels a little bit more than that. Feels like there's something that's come out and it's not really hit the headlines. I've looked on Live Squawk, can't see anything there. Or can't see anything that I've worked out is relevant. There's some good stuff on there. So yeah, I think it's obviously the US equities do slightly different things. Nasdaq obviously pushing towards at all-time highs, so very difficult to argue against there. But on the weekly chart, we're forming a bit of a hanging man, so that's something to be wary of. That's a sort of candle which opens high, pushes higher, has a sell-off, but then retraces back to the open of the weekly. With the weekly open, but it's a bit of a warning sign, maybe. So let's see how that finishes today. But everything else, we've got this sort of like the Dow is pushed ahead of the 78.6 retracement, which we like to look at. You've probably got the 88.6. It's capped it, but I don't really use that very often. And the S&Ps, I've actually traded the S&Ps this morning. I haven't traded many of the indices for a little while, but traded that this morning. Just sold that when I saw the FTSE and the DAX getting slammed, and the US didn't seem to react at the same time. So it may be a European, Euro UK story. I don't know. But I think that's about it.
Yeah. All right. Well, news-wise, what happened yesterday? US jobless claims, they were lower than expected. What was it actually? Declined 963,000 against last week's 1.12 million, and it was below the consensus of 1.11 million. So it's big numbers that we're talking about. But there they go. US bond yields edged higher following the jobless claims. There's a lot of unease in Congress at the moment about, there's a lot of arguing, isn't there, about the next stimulus. They're talking about they want $1 trillion is what the Democrats are looking for, and that doesn't look like it's going to get resolved anytime soon, really. Today, in the sort of on the calendar, we've got GDP, Eurozone GDP out in 59 minutes. It's expected gross domestic product minus 12.1 year quarter on quarter, minus 15% year on year. Retail sales out of I might as well share my screen while I'm going through this.
Yeah.
Retail sales out of the US expected 0.8, last 5.6, which is pretty crap, isn't it? Let's face it. As expected, Michigan consumer sentiment again 72, last 72.5. So there's some decent figures for a Friday, and then we've got a holiday Monday. What's this? Assumption holiday on a Saturday. That's very nice. Thanks for giving me that off. How very bizarre.
Lovely.
All of Europe can have Saturday off for the boots. And then on Monday, overnighter GDP out of Japan. So let's have a quick, very quick shifty at the gun to the head, and then we'll move quickly on to something else more exciting. Stevie took a short trade in cable, 130.86 with a relatively tight stop, and got stopped out, -1R. I took a short on sterling Swiss, so it was obviously sterling Swiss strength, not sterling weakness, that resulted in a small 0.7R. So we dropped tiny again yesterday. Yeah. We're, as we keep on saying, we're going absolutely nowhere at the moment on the trade of the day. Yeah. What are you looking at today, Steve?
I was going to say, you've kept us alive in that this week, so hopefully I'll try and do something for you today. I think I'm going to go with, obviously we've talked about the stock story. I think there's potential for some more downside in there. I think that'll maybe a little bit of strength might filter through to the gold and silver. So I'm going to go with silver this morning. I was looking to buy a dip, as I said, and in gold that hasn't got there. So I'm going to go looking at the slightly shorter term chart. Let's try and get a bit more of a shorter term picture on there. This was the level I was looking at yesterday, funny enough, 26.35. That was my buy. This was my buy trade earlier yesterday. So it's clipped it this morning and it's extended higher. We've got the momentum pulling back, maybe a crossover here. So potentially that will be all right. So I'd like to try and follow this through, and it's don't really expect it to go there, but if there is underlying news that we don't know about yet out, then
never say never.
Yeah, so the trade is to 26.60. I'll say 67. Oh, it moved again. 68. I'll give you 68. And let's look for a let's keep a 18 stop on it, shall we? 26.18 stop. Although I'm looking to buy $26 on the intraday trade, so this is obviously a bit of a gun to the head trade. So, yeah. But maybe that's what I'm doing wrong. I'm sort of like focusing too much on. Oh, here we go. 3-to-1 risk reward is targeting 28.18. Buying at 26.68, targeting 28.18. Stop at 26.18.
Lovely.
Which is just below the swing low.
Good luck.
Cheers.
I'm stuck between two. I love this one because the R on a Gartley is all the way down here at 103.50, but I think we've travelled a little bit too far from 25 ticks from the entry level. So I'm going to look at Euro Aussie. It's going to break down time frames very quickly. So monthly time frame, giganormous. Do you like that word? Giganormous.
That's a great word.
Sell off from the March peak. There's some previous swing low here, 153.05. If you squint really hard, or if you move that so it actually targets that, it would be an expanding wedge formation that has a bias to break to the downside. Get nothing to take away from this chart. weekly chart, apart from the fact that that is extremely impulsive, and this is a period of consolidation. If
You're
we
right,
go,
that is giganormous, isn't it? Just
if we go to this time frame, it looks like a corrective channel formation. And if we just draw in here, what I quite like is this 161.8% fib here. So potential over the long term to get a decent move down to the down to these sort of levels. This is our call this morning, so we are short in Euro Aussie. 165.13 is our bespoke resistance level, so we've just broken below it. We've got some decent outside bars in a few time frames. This is the 2-hour chart. I think if I go to a 4-hour chart, we've got some sort of other formation as well. Could be seen as a star formation, or not a star formation, an evening. I don't mean doji star, do I? I mean evening star, because it's not a doji. And the 1-hour chart is an engulfing. So even though we might get a little bounce back from this previous swing low, the prime short entry is actually 165.22 now. But I'm going to get short here because I've waffled enough. Selling at 165.01.
I'm just thinking about that song, Bird's Eye Potato Waffles, so waffly versatile. Can you remember that?
What are you thinking about that?
when you said waffling.
Jesus.
Bird's Eye Potato Waffles, so waffly versatile.
Right. We move quickly.
I get very distracted very easily. I'm sure you'll know. There's a couple of headlines I'm just picking up on.
Yeah.
EU Commission opens anti-dumping investigation into China's aluminium flat-rolled products following complaint. China Foreign Ministry says China firmly opposes US action on Confucius Institute. China reiterated it's been fulfilling US trade deal and hopes that the US stops discriminating against Chinese firms. So a little bit of a negative
handbags,
maybe. Yeah, that was between 8 and 8:40. Also, that just at 9 o'clock, just as we've been speaking, German economic minister has said the industry's rapid recovery is continuing, but it will lose momentum due to weak foreign demand. And apart from that, that looks about it.
All right.
On that, and sort of like morning headline front.
They can escalate these things, can't they, quite quickly, as we know. But doesn't seem that market moving, but you never know.
Yeah,
thin liquidity as well, aren't we? August.
Yeah,
I'd like to say everybody's on holiday, but they're not, are they? But nobody's working, so still liquidity is pretty poor. So anyway, Euro Aussie, I'm getting short at 165.08. Targeting 162.77, which is a 61.8% fib, with a stop at 165.41, which is just above this. And if we the reason it's there is if we go into shorter time frames, we might make a little head and shoulders pattern here, I think, hopefully, before we move to the downside. All right, I think we're all good. Anything else?
Yeah. No, all good in the hood. Let's go out and smash it.
Well, have a great day. Have a lovely weekend.
And
we'll speak soon.
All right, cheers.
All right, lovely. Cheers.